Welcome to the Realizations Podcast. I'm Andrea Gordon, your host, and I'm excited to explore the world of real estate with you. In a world where perceptions often overshadow reality, Realizations seeks to redefine what it means to be a realtor. Join me as we peel back the layers of the industry, uncovering inspiring stories and celebrating the good in real estate. Whether you're a homeowner, a fellow realtor, or simply curious, this podcast is for you. Welcome to Realizations, where perceptions meet reality. Let's dive right in. Hi, everybody. Welcome. My name is Andrea Gordon, and I'm your host on the Realizations podcast. And today I'm very happy to have Robert Feldman, who is the CEO and co-founder of WOWS Insurance in Westlake Village, California. Hello. Welcome, Robert.
Hello. Hi, everybody.
Insurance is a hot topic right now in real estate.
Absolutely.
And in our area in particular, we've all been scrambling around trying to find good insurance, what have you. So, Robert, can you tell me a little bit about what is going on in the insurance industry right now and how you fit into it and how my viewers can learn and utilize your services? That would be super.
Absolutely. First of all, as you mentioned, I'm the CEO and co-founder of WOWS Insurance. I've been in the insurance industry for 27 years. God, how fast time goes, as they say. I, for 25 years, was an insurance broker, a traditional insurance broker. I was on committee for over half of the 14 insurance carriers I worked with. I always had a special kind of designation where I would bring insurance carriers into California or work with senior leadership, really being almost like the field intel for not just California, but 10 Western states. So I worked throughout California, been doing that for a long time, been in every major fire, I'm sorry to say, because we specialize in homes. And so whether it doesn't matter whether it was the Woolsey fire or the Napa fires or different fires, I've always been in those fires, seen what works and what houses survive and which houses are the ones that don't survive, and really helping consumers throughout. About almost 3 years ago, built a program for one of the major insurance companies. I was asked, how do we change insurance in California and the 10 Western states? Long story short, built it, and the insurance company, I'm sorry to say, at that time did not want to continue really moving into California. And
Right.
so I actually launched it as what's called an MGA wholesaler. So what that is for everybody listening right now is I actually appoint insurance brokers throughout California and again, the 10 Western states to write insurance programs for homes that we bring in from London, the Lloyd syndicates, or different insurance carriers we wholesale through great companies like Stand, things of that nature that are just really not in the market right now. We have a company called American Western that is just absolutely a great company through Munich Re, which is the largest reinsurance company in the world. It's an A+ rated company. I always laughed, I never had the 2+. So usually it's A rated or things of that nature, A+. Long story short, we are really changing the tides. And what's really the focus of WOWS and what's changing the tides is really what's called, and this is a newer term for a lot of people, but you, Andrea, probably heard it with your car stuff situations, is what's called fire hardening.
Yes.
Everybody out there listening right now needs to realize, I don't care if you're a 2,000 square foot house or a 25,000 square foot house. Fire hardening is the next generation of what's happening in insurance. The reason why we are so popular with a lot of the London syndicates and be able to bring in, we secured just recently an additional 20 billion in capacity for California in the States. And I keep working on other line slips and things to bring in, is that we are really based on fire hardening. Our WOWS program is that way. Our line slip, which is the additional capacity, is that way. The insurance companies we're partnering with are really that way. And what that really means is the days of not paying attention to what's called lean, clean, and green, the 0 to 5 feet mitigation, meaning no vegetation combustible within 5 feet of the house, and the difference of 5 to 30, and the terrible eucalyptus palm trees and cypress trees that are really destroying houses in these fires. There's state laws that have been passed. We're helping. Your own car contract that you've seen now has 6 to 12 questions. I've been working with that. I'm speaking actually at the Reimagine conference for your incoming treasurer, Nikki Copa, on fire, basically,
Right.
and the mitigation and the insurance and the changes going forward.
Mhm.
So it's a thing that there's certain elements we're not going to be able to defend against, like with the Palisades fire, 80 to 90 mile an hour winds, you're not going to defend against.
Right.
But you can defend your house against open exposed eaves, and you can make sure you don't have the vegetation within 5 feet of the house. And really, the fire hardening reports that are now out that we're doing, and even down to really fire defense systems on some of the larger homes, are really making the difference.
Hmm. My own home is a 9 on the fire scale because of
Yeah.
I'm in the Claremont Knolls, which is a big set of hills and totally ringed with trees and forests and what have you. And so it feels like I'm getting penalized, even though by the way, my entire front yard is lava sand.
Yeah.
And I have a 20-foot clearance between my house and anything
Yeah.
vegetation wise. So, the question I have for you is when you are just in these places that where you're directly up against, where you are abutting a forest or some such, how can you successfully get insurance in these hill situations?
We have, I hate to say it, we fixed it top down. And usually what happens with most insurance carriers right now is the larger homes are the ones that get affected the worst, meaning that there's not a market. We've been fixing the larger down. Now, what the great thing is, we've been able to do things where we actually have our line slip. Line slip is also just capacities, number of homes you can bring in from the Lloyd Syndicate, for those that
Mhm.
don't know what that is. But what's really neat, Andrea, is that we have a lot of companies now that are copying us, that are some of our core principles. We had a 4% loss ratio with the Palisades fire.
Wow, that's better than anybody, right?
And anybody. And so what happens is based on just pure principles of fire hardening. So you're going down absolutely the right road. You're doing the things that are going to be necessary. For a lot of consumers out there, this is a shock. This is going to be, it's going to be a change. There are state laws that are being passed, that have already been passed, that are going to require these things to occur. They're on the new builds right now. They're going to require them. The key thing always we always laugh about is enforceability, right? How do you
Right.
enforce something? And there's a lot of scary kind of things of how they're talking about enforcing it.
In our area, they already send drones over to check people, whether people are complying with brush clearance and things. There are regulations in place for that kind of stuff. But the question I have is, as long as there is this gigantic nature interface, because people want to be out in the boonies. And if
Mhm.
you're right up against, like I had a client recently where the insurance company they decided to drop her because
Mhm.
the next door neighbor's property was totally wild and had 35 eucalyptus trees on it. These
Yep.
they required her to clear the eucalyptus trees on her neighbor's yard in order to continue insuring her, which she could not afford to
So,
do. And so she's in
well,
that house.
and so what happens is in that scenario, there are some companies that just, I'm sorry to say right now, are trying to get off risks.
Oh yeah,
Okay.
absolutely.
Okay. And then there are ones that are aggressive. We
Mhm.
have several right now that we work with as a wholesale and also our own programs, where if the
Mhm.
properties are cleared, as long as you have 30 feet of clearance, is what I would say. And in
Mhm.
your situation, we were talking about houses. These houses are not right on top of each other. One of the things that really damaged the Palisades, or what caused it, was, Andrea, you and I could have probably held hands and ran from rooftop to rooftop
Right.
without
Right.
touching the ground. Okay.
Right. I
Because
know. I
the
know.
houses were so stacked on top of each other.
I had 8 friends lose their homes in,
Yeah.
I forgot the name of the place, but Del Rey or something like that.
Yep. Yep. Yep.
Yeah.
Yeah. And so that's part of the reason why it's struggling right now in the rebuilds at the
Hmm.
same time, because they're enforcing these space requirements. So you have houses that can't rebuild right now because they're too close to other houses eventually being rebuilt. So
Right.
this is the thing that we're going to be looking at. If fire hardening is the key thing, defense systems, what type size house was that one for that example for the consumer that it was not able to get a policy renewal? Can I ask what size house?
It was like 1,400 square feet.
Okay, so one of the things that's still a fail safe for the state of California is what's called the California Fair Plan.
Right.
So the fail safe for for that situation. The problem with the California Fair Plan is it has limitation. It
Right.
has maximum coverage of 2.75 million on rebuild. Well,
Right.
that's going to be plenty when it comes to a 1,400 square foot house.
Correct. But for
I can
most of the houses around here, nuh-uh.
Yeah. So when you have a 5,000 square foot house, and the mistake a lot of consumers are making right now, and I'm sorry to say, the industry, my brothers and sisters that are appointed with us are not helping either, by the way. There's a
Right.
lot of people that are still telling consumers that you can rebuild for 300 or 400 a square foot.
You can't. It's 500 a square foot.
Minimum. The Altadena fire is again showing the
That
analytics.
was the place. That was the name of the place. Altadena,
Altadena,
not Del Rey.
yeah, Delray, Altadena. And the Altadena fire, the rebuilds are minimum 600 square foot. And this is middle income. We're not talking the Palisades with the big homes and things.
Right.
This is 600 a square foot.
It's crazy.
And there's a whole argument over that situation. And I always come back and say, look, here's the answer, right? It's 600 a square foot because that's where the market is currently to rebuild.
Right.
Whether I don't get into the politics of what's causing this and blah, 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 blah. Doesn't matter. The bottom line is this is what the cost is. And so with fire hardening, why it's so important to realize is it doesn't matter how great the insurance is. If you and I were to lose our homes right now while we're on this podcast, God forbid, this is the only shirt I own.
Uh-huh. Yeah.
I don't have another pair of shoes. I don't have a pillow to put my head on. I have a plate or a fork to eat with.
Right.
It's just all the things that are taken into consideration. And so why we're making the change, we are a wholesaler. We appoint insurance brokers. We have a lot of consumers that come to us directly. If they have a broker that we appoint brokers all the time, insurance brokers. But we have a lot of realtors, Andrea, as everyone can tell, I'm ADHD and I'm OCD at the same time. Meaning, do you know any realtors that are that way?
Me.
Yeah, exactly. So I'm just teasing about this because what we've done is we work with a lot of consumers through realtors also. But if
Right.
they've got a good broker that was working with them, we help them. The only time we work it both ways, and it's because it's important. The market's changed, and
Yeah.
people
Oh,
realize the market's changed.
I had heard the California Fair Plan was actually even running out of money. Is
That's actually not correct. So,
okay.
I mean, California Fair Plan has now. This is a good news, bad news. So, what do you want to hear first? You want to hear the good news or bad news?
You just tell it to me. Whatever.
Okay. So the California Fair Plan at the end of last year, prior to the Palisades fires, put through what's called a loss assessment provision. Now, what a loss assessment provision means is that in the event of a shortcoming of the fact that there's not enough money, they're able to loss assess all the additional money or needed to make it solvent from the current policyholders. So really similar to a condo or HOA.
Got
So,
it.
so if you're in a condo association and you are loss assessed because
Hmm.
of a shortcoming of a covered claim, you might not be in damage or have had your unit burned, but because the other units did, you can be still pulled into. Good news, bad news. It means that the California Fair Plan isn't going solvent, but the way it could be potentially solved could cost consumers that are not in the fires that are on Cal Fair Plan no money or additional premiums.
So the cost might go up.
Exactly.
I talked with a young man day before yesterday who is working with a company that is creating an AI program for insurers to predict outcomes. And are you already working with those sorts of things in place?
Actually, believe it or not, that's already in.
Hmm.
That's interesting is for example, a company stand we wholesale for. These are for
Hmm.
larger homes, 5, 6, 7,000 square feet or larger, up to 10 million in total rebuild. They do full AI simulations on houses. They are into the fire hardening. They will tell you exactly what tree needs to be removed or what needs to be done. They are really aggressive in this field, but they're also aggressive in price, meaning they're a lot better than the current market in
Well,
the
he was saying that what would happen is that because there's so much research involved when you're insuring someone, that AI can reduce something that can take a person 3, 4, 5 hours into 30 minutes or an hour.
yes.
Because of that, it helps not have to hire so many personnel, but and also streamline the process a little bit. And I thought that was actually one of the few uses of AI that I think is terrific.
Oh, it's absolutely already being used. We use it CoreLogic or now Cotality, as I say, as their name changed. I'm a
Mhm.
speaker for Cotality.
Oh, cool.
And that whole conference I did earlier this year was all about how AI is being integrated into fire modeling, looking at. So I think the industry is already going in that direction. It's gone aggressively into that direction because to your point, every time you can slow down or speed up the timing of things and being able to look at in costs and rebuilds and all the different things that you're looking at, fire patterns and all the patterns, that's just another tool because really what still, Andrea, is killing insurance companies is oversaturation of market in meaning and proximity of risks, meaning that we talked about the houses being too close to each other. So it's also having too many houses on a given area. So,
Right.
for example, I mentioned 20 billion bringing in capacity. We spread the risks so that there's never more than one home potentially in a fire.
Right.
And when you do that, you're forcing insurability, you're forcing insurance companies to be profitable. So let's say you and I have a portfolio and it's stocks versus insurance. But we know we have 100 stocks we invest in and they're all the exact same costs. If one stock drastically takes a decrease, but 99 other stocks stay the same or grow, what have you done? You've got a very successful portfolio. You're growing. So the
Right.
idea or concept of what we really work on is a lot of times is really trying to fix or change how that works. Meaning the state farms of the world, what got everybody in trouble was they were oversaturated the market. So when you look at the analytics, which is what's really scary. So if I take a given street, even if it's in a high fire zone area, the cost of what's called reinsurance, the true net insurance cost, the probability or premium to charge for that given risk. I don't get into rates. I'm just going to say it's X.
Mm-hmm.
Every time you add another home in close proximity to that policy as X, you're driving the rate of cost up because now
Right.
you're not looking at a one loss, you're looking at a two loss. Where if you
Right.
were to take that same house and put it in a different geographic area where there's no overlap, you've now start to reduce the cost of that insurance.
Mm-hmm.
So it's because it's spread of risk.
Right.
Conceptually, what we built at WOWs, it's why we're successfully writing homes. We write our WOWs program, and by the way, some of ours, which is neat for your listeners, are the first in California history to be fully transferable from sellers to buyers.
That's fantastic. I always ask my sellers when I'm putting together a disclosure packet, I ask them to ask their insurance agent if they would insure for a new buyer. And of course, for the last 4 or 5 years, the answer has been no.
So think of this as for you. You do a range of home sizes, correct? Okay. So let's pick one that's 6 or 7,000 square feet. It's a larger home.
Hmm.
What if we were to be able to do a full fire hardening report for that consumer that you're bringing to the market? So it shows the fire hardening. It gets them into an insurance program that is now fully transferable prior to going to the market to sell the house. How much easier is your life if,
Oh,
I mean,
absolutely. Because people are using insurability as a contingency to get out of transactions at this.
bingo.
It's very hard around here. Robert, this is fantastic.
Yep.
So can the regular consumer connect with you
Yes,
or
of course. They
okay,
always can.
okay.
Um, Easiest way to connect with me is I always give her my email. It's Robert at, and I spell it out intentionally because people will forget the S. So it's Robert at WOWS insurance.com. You can look at us. I've been on everything from AM Best, which is the rating service podcast, to Bloomberg, to your great podcast now, to
Thank
all
you.
the different ones. And what happens is it's really important to get the word out. Like, for example, I'm speaking in coming up next month in Chula Vista down in San Diego for realtors. And so we're continuing to try to drive the word out about this because it's not a question of if this changed. This is the market of insurance.
Right. Absolutely. And it's been such a bailiwick for all of us around here. I'll ask my managers if they can arrange to have you be on one of our Zoom meetings.
Absolutely.
This is fantastic. And I know that this has been an interesting interior insight into the insurance industry for my viewers because people don't know what all the processes are that go on in all of these industries and they make assumptions. And you know what happens when you make an assumption.
Yeah, exactly what it spells when you assume. So,
Exactly.
and what's interesting is, and I thank you again for that very thing. I just get the word out. I have insurance brokers that'll push on me a little bit and they go, why are you speaking to Andrea? And my response is because, like in this example, I've got to get the information out. So any means possible for everybody out there listening needs to realize that these are the changes. Fire hardening reports are not inexpensive. We don't make money on them. I partner with different ones. We're getting them done, range between $500 to $1,000.
You
But
know what? If you're going to get a property inspection and you're going to get a pest inspection and you're going to get a roof inspection and you're going to get a structural engineering inspection and you're going to get a sewer line
all
inspection, you might as well get a fire hardening inspection so that you
have to.
understand what's involved.
And
That's terrific.
And really, what it is, which we educate, I'm working with your brothers and sisters of the world, really the education part of it of coming to me today and saying, hey, Robert, we're trying to close tomorrow at 1 o'clock. Can you help us?
Yep,
Is
yep,
not
yep.
the answer. So the answer is because I think you can agree with this. I've speaking to a lot of realtors throughout California and 10 states. If you've got a policy that's already fully transferable, what's the value to that house? Right now, we're seeing a lot of areas of California where the rates are sliding when it comes to the sale prices. And the reason for it, as you and I both know, insurance is a challenge and it's being used as a negotiation tool.
Yeah, absolutely. I know that from my own, first off, property taxes here are crazy expensive,
Yep.
and my own insurance is incredibly expensive because I have California Fair Plan, which is about twice as expensive for me because I have a big house on a 24,000 square foot lot. It's an important part of.
You're gonna need to send it to me after this because I'll take a look at it and review it, and I can tell you absolutely can send it to me as. But again, though, to your point, it's just getting the information out and really making sure we get the right answers is what I'm going for. There's a lot of bad information, and I'm sorry to say, a lot of insurance brokers that we talk to that are appointed, that come to us, that are appointed, just don't have access to market. So the automatic response is that's got to be the California Fair Plan.
Oh,
Well,
absolutely. Yeah.
I'm seeing like the larger houses. The problem with the Cal Fair Plan is there's a depreciation clause. It's called actual cash value. If you're not insured to value within 80% at the time of loss, the Cal Fair Plan has the right to depreciate out your coverage. And there's just a lot of things that just need to be fixed. And I'm going to be the very first one to say it's not always a great answer. Okay. Like, for example, when we review yours, I might fix yours, tweak it, and say, this is where you need to be. Or here are other options. They might be higher considerably than what you're looking at right now. Okay. So we do a lot of times when we're working with consumers is it's really, because to me, it's a no-brainer. When we have one of our carriers that is, let's just say it's the exact same price you're paying right now, you're 100 times better than being on the Cal Fair Plan. I'm just telling everybody out there right now, it was a policy built as a policy of last resort. It was built in the actual 1960s, originally for the Watts riots, believe it or not.
I do.
It was built for the inner city when insurance companies weren't writing. And it's funny how it's made into now for example, on your Cal Fair Plan policy, we could do a whole segment, by the way, just on Cal Fair Plan. You and I could talk about this. It doesn't have loss of use, or what's called ALE, additional living expense. It has loss of rents. It was built for more of the rental things. It's just
units, yeah.
They just didn't change the wording to it.
Right.
So that's just things that people don't know and understand. And it doesn't matter if you're a 1,400 square foot house or a 14,000 square foot house, knowing you have to be insured to value or having something that stacks on top of it, it's dangerous not to be there. And so the 1,400 square foot house, your friend is going to be in, because we always look at it, even if you said it was 1,000 a square foot, that's 1.4 million. If you were to add all the other coverages, it's going to be less than 3 million. That person's fine. What do you do with the 4,000 square foot house?
Exactly. Well, you have been an incredible guest, and I want to thank you so much for being here. I have actually another podcast right after you, so I've got to go. But I just really appreciate you. Thank you so much for coming on my show today. And I think that
absolutely
love this podcast. And I'm going to be back in touch with you very soon, both about my own policy and also about getting you in to talk to the various realtors at my office, because
that would be great.
You're phenomenal.
Awesome.
Thank you for joining me on this episode of the Realizations Podcast. I hope our conversation has shed light on the true essence of real estate and the people behind it. As we wrap up, I want to extend my gratitude to our listeners for their support and engagement. Your feedback drives the heart of this podcast, and I look forward to continuing this journey with you. If you enjoyed today's episode, please consider subscribing to the Realizations Podcast and leaving a review. Your support helps us reach more listeners and spread our message of positivity in the real estate industry. Until next time, remember to keep an open mind, embrace empathy, and always seek the good in every situation. I'm Andrea Gordon, signing off from Realizations. See you next time.